Hello everyone, this is your host Vaibhav. In today's session of Daily Stock, we are going to look at the earnings of the Exxon Mobil, which is the one of the largest company, and I think 10 years back it was not one of the largest, but actually the largest company by market capitalization. But so much has changed since then. Now data is the new oil, and as expected, all the companies with a larger market cap these days above $1 trillion mark tend to be from the tech sector. Of course, there is exemption of Saudi Aramco, but from the tech space, the companies dominate the ranking, and ExxonMobil, regardless of its market valuation, is one of the highest net profit generator. And for the last quarter, it was making more than 7 billion US dollars. And there are not many companies in the world who make this kind of profit in a single quarter. So that's how you get the idea of what kind of company the ExxonMobil is. It is the energy supplier for most of the North America, and it has reserves which are going to help it to remain in the lead position for the foreseeable future. And along with the crude oil segment, it is also enhancing and trying to get into the other space of carbon neutrality. It is also looking to be provider of choice for the EV makers with its mobile lithium, and in the space of going for the green energy. It is also in the run to be a carbon neutral company with its recent acquisition. So overall, it is a leader in its segment, but it is also keeping in with the changes and trying to be future ready. Now we see how things have panned out for it in the last quarter, and afterwards we will consider its share price performance in the recent past. For the last quarter, the company delivered industry-leading earnings of US 7 billion, and for the whole year, the earnings were of US 36 billion, with the operating cash flows of more than US 55 billion. It has also distributed to the shareholders US 32 billion. So if you want the steady income in the form of dividends, I would suggest investing in the stocks of the ExxonMobil. So regardless of its valuation going up or down, you can be assured of sizable dividends coming into your kitty. Now, if you look at the highlights of the earnings, there was not much of an growth in quarter on quarter or year on year terms, but then its base is also quite high. And to get the sense of how things have been, we have to look at its recent quarterly performance, and for that, we will have to consider these condensed consolidated statement of income. You can see that the total revenues were upward of $81 billion from sales and operating revenue. Then there is income from equity affiliates and other income. So overall, the total revenue was more than 84 US dollars, 84 billion US dollars, not 84, with the net income being of $7.6 billion. So in year-on-year term, there is a significant decline from the same quarter's earnings a year back, that is for the fourth quarter of 2022, but there have been cases related to the one-time charges, and there was a reduction on that front as well, with impairment charges eating up some of its net profit. So we will have to keep that in mind as well, that some of it was a one-time charge, and in the coming quarters, the net profit is expected to bounce back again. For the whole year, the data looks promising. Of course, there is also decline from more than 55 billion US dollars to now at 36 billion US dollars. Now let us consider its cash flow statement. The cash and cash equivalent at hand has gone up for the ExxonMobil. From the operations, it generated more than 55 billion US dollars, which is markedly lower if compared to the 12 months ended December 31st, 2022, when it had generated US 76 billion. Out of that, last year it had used 14.7 billion US dollars, and this time around, for the investment purpose, its cash outflow is markedly on the higher side. There is almost 50% growth in the cash outflow for the investing activity, but there is a decline in the cash generated from the operations. And then if we look at the cash outflow for the financing activity, it is lower by around similar magnitude. So we have 5 billion US dollar growth in the cash outflow of investing activity, but there is decline of around 5 billion US dollar for the cash outflow of the financing activity. So both these in a way compensate each other. And with that, we have this increase in the cash and cash equivalents of almost US 2 billion. Last time around, the cash and cash equivalent had jumped by a remarkable figure of US 22.8 billion, and this time around it is not that high. It is more closer to the ground and reasonable, and it is also likely to be sustainable and get better in the coming quarters. So that's how the things panned out for the ExxonMobil in the last quarter of fiscal year 2023, and it is expected to get better from here onward with these tough days of high inflation behind. We expect the consumer spending to pick up, and that is going to help the ExxonMobil, which is the energy provider of choice for most of these consumers. Now we shift our gaze to the technical side of the story. This is the longer time frame charting with each candlestick defined of weekly time frame. So if you are a trader and investor who considers the investment decisions from the longer term perspective, then if you look at the chart pattern of the ExxonMobil, you will see that for last couple of quarters, the ExxonMobil has been holding close to the 100 price range. Of course, it has been making these higher highs, and this time around also, I'm expecting the ExxonMobil to climb above 120, which was its recent swing high. So that is the expectation. Looking at its current price formation, the current upward trajectory, it had declined close to these prior swing lows, and from there it found some support, and now it is trying to climb higher and higher, and it is doing quite steadily. So that is also one key feature of its growth momentum, and that makes it more assuring for the average investor and trader, because if it continues to grow and climb steadily upward, we can adopt buy on dip strategy and go for the newer trade as and when we find it consolidating after a decent correction. Now, let us reduce the time horizon to medium term. In the medium term time horizon, till the month of January, it was making lower lows and lower highs. But since then, the things have changed, and after consolidating close to the 100 price range for the most of February, it started to rise in the first week of March, and it is not really showing the signs of stopping just yet. For last couple of weeks, it has been steadily climbing upward, and for the newer trading and investing opportunity, I feel we will have to now wait a while and allow it to show some correction and consolidation before we can make our mind. And I feel as long as it holds above and close to the 100 price level, we can be fairly confident of the continuity of these upward trajectory, and in course of time can expect the ExxonMobil to climb past this 120 price level. So from the medium term trajectory as well, we are fairly confident of it continuing to grow. And on the lower time frame, when we use hourly as our candlestick time frame, the price formation is equally promising here also. It has been climbing steadily, so if you had adopted a buy on dip strategy, you would have made a lot of money. And moving forward also, I feel the same strategy is likely to bring us reasonable returns, and in the near term it climb start to climb again in the next week. So watch out for the price moves in the initial days of the next week, and I feel if it holds the ground, maybe in the second half of next week, we will see fresh movement on the higher side, which eventually might take it close to the 120 and thereabout. So regardless of your time horizon, the price formation is indicative certain bullishness in the ExxonMobil, and with that in mind, the best thing we can do is go for buy on dips approach, and as and when we find optimum risk reward ratio along with plausible trading setup, we can go for the newer trade and expect to benefit from these favorable odds. So that's my take looking at the current price formation of the ExxonMobil. We have already considered its quarterly earnings, which are good, not that good as was the case in 2022, but still quite good. And with that in mind, we can expect further growth in the ExxonMobil stock as the things are likely to get better on the fundamental side in the second half of this year. So, with that possibility, we can expect further growth in the valuations of the ExxonMobil. So that's all from my side for today's session. If you have any query or any idea to share, do write to me in the feedback and I would be more than happy to take the discussion forward. Thank you all for joining in. Have a fabulous time ahead. See you next time around. Till then, goodbye.